Micron just reported the best quarter in company history, and the stock is doing something pretty wild on the back of it in the after-hours session. The stock is up more than 14%. $41.46 billion in revenue, $25.11 in earnings. Both numbers absolutely blew away what Wall Street was expecting. But here's the part that makes this interesting. Just one day before this report, the stock dropped 12% on a global semiconductor sell-off that had nothing to do with Micron itself. So today we're going to break down what actually happened, why the chart looks the way it does right now, and where this could go from here. Not financial advice, just walking through the data and the setup. Let's start with the actual print. Analysts were looking for around $20.39 in earnings and $35 billion in revenue. Micron delivered $25.11 in earnings and $41.46 billion in revenue. That's not a small beat, that's a massive blowout. Gross margins came in at 84.9%, which is also above expectations. For a company that used to be thought of as a commodity memory maker with thin margins, that number alone tells you something has changed structurally and fundamentally. Whether this all turns out to be seasonal or short-lived will be seen, but for now, this is a cash-flowing machine. But honestly, the guidance is the bigger story here. Micron guided next quarter's revenue to somewhere between $49 and $51 billion. Wall Street was only expecting $43.2 billion. When the guide beats the estimate by that much, that's usually what really moves a stock more than the quarter that already happened. It also provided a lift to almost every AI-related stock in the after hours. Let's hope for continuation tomorrow. Same story on earnings guidance. $30 to $32 a share guided versus $24.80 expected. So why was the stock down 12% the day before earnings if the fundamentals were about to come in this strong? It wasn't about Micron at all. South Korean chip stocks crashed about 10% and actually triggered a trading halt over there. And that fear spread globally into anything memory related, including Micron. Add to that, the stock was already up north of 300% this year, heading into earnings. So you had a combination of profit taking, nervous positioning, and a sector-wide scare, all colliding right before one of the most anticipated earnings reports of the year. Let's talk about why people are excited about this stock. 2 days before earnings, Micron announced a strategic partnership with Anthropic, the AI company behind Claude. This wasn't just a supply deal. It covers memory and storage architecture design for AI systems, a multi-year supply agreement, and even a strategic investment into Anthropic's funding round. Anthropic's own chief compute officer said publicly that memory and storage are central to how efficiently they train and run their AI models. That's a frontier AI lab tying its own infrastructure roadmap directly to Micron. On the earnings call, management said they now have roughly $100 billion in what they call strategic customer agreements signed, and they expect actual revenue to exceed even that number over the life of those contracts. That's a level of forward visibility this company has never had before. Here's the structural piece. Micron is one of only a few companies on the planet that can produce high bandwidth memory, or HBM, at scale. Every major AI data center build-out needs this memory sitting right next to the processing chips. That scarcity is exactly why Micron has pricing power it never had as a traditional memory maker. Now the other side of this. Micron is about to spend a massive amount of money. Capital expenditures are guided above $25 billion this fiscal year, and management says that number steps up meaningfully again next year as new factories come online in places like Taiwan, Singapore, New York, and Idaho. And Micron isn't winning this race alone. SK Hynix actually holds the larger share of the HBM market right now, around 62%, and is currently ahead on a key speed metric for the next generation chips. Samsung is also ramping up its own capacity. This is a real competitive market, not a Micron monopoly. Also, SK Hynix plans to list ADRs on the NASDAQ on July 10th. This will more easily provide it as an investment option for US investors, potentially sucking liquidity from Micron. There's also the sentiment risk we already touched on. Just weeks ago, a disappointing AI revenue forecast from Broadcom was enough to drag Micron down sharply, even though it had nothing to do with Micron's own business. This stock trades on broader AI sentiment as much as its own numbers, and that cuts both ways. Let's look at the chart itself. There's a well-established support zone around the 21-day EMA at around 980. That level has acted as both support multiple times this year. If it holds up the post-earnings move, can also look for support around prior highs right around 1,088. The all-time high was just set on June 22nd at $1,213, just 2 days before this earnings report. What happened technically lines up almost exactly with what a textbook setup looks like. The stock dropped into that support zone the day before earnings on fear, then got rejected off that level once the actual results came in. That's often read as a bullish signal, assuming the level holds going forward. One thing worth watching, volume on the bounce so far has been running below the daily average. That tells us the real test of conviction is still ahead, probably in the next full trading session once everyone's had a chance to react. So let's put some numbers on this. In a bull scenario, If the post-earnings momentum holds and we get confirmation on pricing power into 2027, I'd watch for a move toward that $1,300 to $1,500 zone, which is roughly where some analysts have set their targets. In a base case, the stock probably just digests this move and trades in a range around current levels while the market processes everything that just happened. And in a bear case, if AI spending sentiment sours again the way it did with that Broadcom scare, or this support zone actually breaks, I'd watch for a slide back toward 820 to 980. Now, I want to be upfront about something. Those price ranges aren't coming from some statistical model or a Wall Street algorithm. That's just my own read on the situation, weighing the bull case, the bear case, and what the chart is telling me. Treat it as a framework for my thinking, not a prediction. Here's my honest takeaway. The fundamental story here is about as clean as it gets right now. Record quarter, record guidance, and a real AI partnership to back it up. But the stock already ran over 300% this year before this print even happened. So chasing it after a pop like this is the riskiest way to get involved. If I were watching this one, I'd rather see how it behaves around that prior high area and look to buy on a pullback. As always, not financial advice, just sharing how I read the data and the chart. Do your own research before making any moves on this one. If you found this breakdown useful, subscribe for more deep dives like this one and let me know in the comments which ticker you want me to break down next. Thanks for watching and have a great evening.